Good morning and good early afternoon. Welcome to our last public webinar in January. Isn't that crazy? 1 month into 2026. How's everyone doing? How's everyone across the country? Where are you calling from? And is it freezing where you are? I'm here in San Francisco where it is cold, but probably not quite as cold as the folks on the East Coast. Feel free to put a note in the chat while we welcome a couple more folks. Cleveland, Tennessee. Hi, Kim. Mira, it's cold up there in Washington. 10 degrees in Chicago, Ryan. 10. That's gnarly. Welcome. Hussein from Oakland. Welcome. 1 degree in rural Idaho. That is brutal. Who's bragging about it being sunny and warmish in San Jose, Robert? It is a beautiful day in San Francisco, but it is cold. Feels like -6. I'm with you, Patricia. That is brutal. I hope you are warm. Well, welcome. Today, we are talking about different business structures, specifically for self-employed folks, businesses of one. There's a couple different ways you can be structured. And so we're going to go through a brief presentation and then open it up to Q&A at the end. I am one of many people who is sick right now. So if I'm a little winded or slow or need to pause for tissue, please bear with me. But no bad questions here. Please feel free to put your questions in the Q&A box to make sure that we can address them and we don't miss them. But super excited to meet with this group. I love the chatter here in the chat. Please keep it going. 66 in Miami, so that sounds very pleasant. Thanks, y'all. We're going to get started. So, choosing your business structure, LLC versus S Corp. One quick plug about Collective. If you've seen our ads or if you've been to one of our webinars before, we were previously focused on S Corp specifically. And just a quick shout out if you are someone who is just new to self employment or maybe a single member LLC structure just suits your situation better, we can now support you. Support single member LLCs who want to remain single member LLCs. We also have the path, as usual, to S Corp. So, two paths to join Collective. Same suite of services, bookkeeping, help with tax prep, estimated tax payments. So, just note as we're going through this presentation, if either of these structures feel like a fit for you, Collective may be able to help. Deborah, brand new to your own business. I hope we can answer any questions that you have, and please feel free to post them. So today we're going to cover LLC versus S Corp basics, when either structure makes sense, and it's very dependent on your unique situation. Some big differences that matter between the two structures, and then we'll pivot over to live Q&A. So keep the questions coming as we go through the presentation, and then we will address them at the end. Again, real quick, Collective is an all-in-one financial solution specifically for businesses of one who are self-employed. So if you need a formal entity like an LLC, we can start with forming that for you. If you want the S Corp election, we'd file that paperwork. And then from there, we pivot over to the operating side of your business. So we do monthly bookkeeping. There's embedded invoicing in your dashboard. If you're an S Corp, we have the payroll integration for that reasonable comp. And then we'll help with your taxes at your end. So all in one app, one fee, one login to make running the financial side of your business easy. I'm going to leave this up here for a quick second. Anna, there will be a recording sent after the session in a webinar. So if you've got a hop or you can't stay on, there will be a recording sent after. So let's dive in. LLC versus S Corp basics. So specifically with LLCs, we're going to talk about single member LLCs where you are the only owner of your entity, or if you're in a community property state and you're legally married, the LLC is owned by you and your partner. So this is really keeping it condensed to that single member, single owner profile. Each of these tax structures have different ways that your profit is taxed. So we're going to go through all of these. So here on the left, single member LLCs. This is where most people usually start once their business feels more like official, like there's momentum going. Forming the single member LLC is usually the first step to making it quote unquote official. The single member LLC is the legal structure that's formed at your state level. So generally we recommend, you form the LLC where you live because that's ultimately where you pay the tax. But you might hear of things like, forming in Delaware, Wyoming, which is fine. You still have to register that LLC or that legal structure in your resident state. So again, the LLC is the legal structure formed at the state level. It's what gives you a legal business name, the EIN, the separate tax ID, and it creates a layer of liability protection. They're relatively easy to set up. Every state has its own LLC formation fee. And when you're structured in this way, single member LLC, and you do nothing else, your business activity gets reported on your personal tax return, Schedule C, maybe you've seen it. And there's no separate business tax return at the federal level. Under this structure, all your profit is subject to a couple layers of tax. It's subject to self-employment tax, which is made up of Social Security and Medicare. It's about 15%. And then you have your federal and state income tax assessed on top of that. The way you pay yourself out of a single member LLC is called owner distributions, owner draw. All this means is you take money out of the business bank account and use it for personal expenses. So there's no formal payroll under a single member LLC structure. Now here on the right, we've got a single member LLC. So this is the same legal foundation that needs to exist. And then you add the S Corp election on top of that. So folks who choose this path are opting to make a different tax election with the IRS. Once that election is accepted, you automatically agree to increased administrative costs and filing requirements. So for example, your business activity is now reported on a separate business tax return with its own separate tax deadline instead of grouped into your personal filing. The way you pay yourself changes. You have to pay yourself what's called a reasonable salary. And now under this structure, it's run through a formal payroll process. The wage is kind of the vessel for potential self-employment tax savings. So in the other structure, the entire profit is subject to self-employment tax and income tax, whereas the S Corp election, it's just the owner wages subject to self-employment tax instead of the entire profit. So very high level points. The basic single member LLC is the legal foundation without an S Corp election, simpler tax profile, generally more self-employment tax paid. Single member LLC with the S Corp election is a little bit more complex with the filing profile, but you may have an opportunity to reduce self-employment tax. And I see some great questions in the chat. Just a quick reminder, please put them in the Q&A, and we will make sure we don't miss them and we can address them at the end. So real quick, paying taxes as a solopreneur. We all pay this big one on the left. If we have taxable income in the United States, we're all paying federal income tax. And then depending on where you live, state income tax rates may vary and also apply. Income tax is the unfortunate, unavoidable truth. We pay income tax. It's usually based on your filing status. So single, married, filing jointly, head of household, and then your total household income. So if you're married and you file jointly, it would be your partner's, salaried income, maybe your rental properties in there, your, capital gains from investments, and then your self-employment income. All of that contributes to your total household income, which ultimately determines where you fall in these income tax brackets. So we all pay income tax. Separately, you pay self-employment tax. So it's made up of two different taxes. Medicare is 2.9%, and then the bulk of it is Social Security. That combined 15.3% is assessed on your business profit as a self-employed individual. So what's happening if you've filed on Schedule C in the past and you've had sticker shock from your tax bill? It's because there's multiple layers of tax assessed on the entirety of your income. Okay, so a quick example. We're looking at a solopreneur who's made $160,000 of profit. So this is the amount left over after you've captured all of your deductions. Here on the left, this is someone who's either a sole proprietor, so no legal structure has been formed, or they have a single member LLC. The reason these two are grouped together is because both of these structures report their business on the Schedule C. So if you fall into either one of these buckets, it's because you're reporting your business on Schedule C, and that determines how your profit's taxed. So here on the left, 160 of business profit. Under this structure, there's no formal salary. Again, it's all owner distribution, which means that entire 160 is subject to the 15% self-employment tax. So this is almost $25,000 in self-employment tax alone. Here on the right, the same person, 160 business profit, but they've elected S Corp and have chosen a salary for themselves of 60,000. So in this example, now that total profit is split between a $60,000 wage and a $100,000 distribution, which means only that $60,000 wage is now subject to the self-employment tax instead of the entire 160. So what does that mean? About $15,000 in self-employment tax that just isn't paid under the S Corp election. And again, this is very high level, it's very generalized, and it's focused on self-employment tax specifically. But just a quick example on how the savings potential might work. And I'm taking a quick look at the chat. Is profit used to determine tax liability? There's a great question here in the chat. If you don't mind putting it in the Q&A so we don't miss it at the end, we can definitely address that. Okay, so when does either profile make sense? So single member LLC, again, that LLC is the beginning, the foundational legal structure to elect S Corp status. So even if the S Corp election is not on your radar right now, or it feels like overkill, or there's some other things where an S Corp's not the right move right now, you may start as a single member LLC regardless. And maybe you start that journey, for the first couple years of your self-employment, and then S Corp is later down the line. But if you form an LLC and you remain a single member LLC, usually this profile is best for a couple different folks. One, if you're brand new to self-employment. So maybe you're testing a side hustle or you're just getting started. You don't have a clear idea of your growth, whether or not you like it. Or maybe your profit's under a certain threshold. So you're kind of still tinkering with your bill rates, whether or not this fits with your other corporate job. Or if you have a high earning salary elsewhere. And so a lot of folks are looking for a savings opportunity with the S Corp election. If you have a corporate role elsewhere, and it's generally over 100,000, it's just an arbitrary threshold, electing S Corp status may not necessarily save you as much in self-employment tax because of that high wage. And we can talk about that in more detail. But single member LLCs, if your self-employed profit is low and or you have high earnings from another corporate role, the savings potential of an S Corp is limited. So a lot of folks stay in that single member LLC profile. Maybe you just want to keep everything lumped into your personal filing, or maybe you live in a state or a region. I'm just going to highlight New York City, where S Corp elections are less advantageous. So I'll just call out New York City as an example. If you live within the 5 boroughs and you have an S Corp election, there is a city level S Corp tax. It's nearly 9%, in addition to your federal and state tax bill. And so in instances like that, that additional tax may negate the savings potential of an S Corp that might otherwise exist. Okay, so on the contrary, S Corp election, it might be best if you have an established self-employed business, you're committed to it, you're growing it, you've got some big growth plans. Generally, if your profit is growing, so after all the deductions, 60,000 or more, it's a great time to have a conversation about your tax status and whether or not S Corp election makes sense. Contrary to the other side, if your additional earnings are less than 100,000, generally this means that it's not going to feed into or limit the self-employment tax savings if you had a higher paying wage. Maybe you want to formalize your business on paper. So once you elect S Corp status, you have a standalone business tax return. Though that tax return relies on more comprehensive financial statements. So not only do you report profit and loss, you also have a balance sheet. So if you've got grants that you're looking at in the future, you need to provide a suite of paperwork, tax returns, financial statements. The S Corp election might support that. And then if you're ready to either outsource or take on additional administrative works, payroll, bookkeeping, invoicing, additional tax filings. And key differences that matter. So we don't have to go through this in detail. You will get a copy of this presentation to skim through this. But high level, single member LLC, the ownership and payment structure. Single member LLC, you don't take a formal payroll versus an S Corp election. You need, a payroll software to run a reasonable salary. The payroll software is necessary because when you truly run payroll, you have withholdings. And then you remit, the Social Security and Medicare, maybe state level taxes to those tax authorities live, and the payroll software processes that automatically. In addition, payroll also has quarterly and annual payroll tax returns, which software will automate and submit for you. The tax treatment for a single member LLC. So all the profit is subject to the 15% self-employment tax plus income tax, versus under the S Corp election, only that reasonable salary is subject to the self-employment tax. Single member LLC tax reporting, generally simpler. It's lumped into your personal filing. So generally there's only one tax return filed each year versus with an S Corp election, you trigger a separate business tax return. That tax return is due a month before the April 15th deadline. So your tax profile and maybe tax prep fees are a little bit higher. Bookkeeping and financial statements. So single member LLC, it's really essentially a profit and loss statement for the Schedule C versus reporting a more comprehensive picture on the business return with the addition of a balance sheet. And then generally cost of maintenance. So single member LLCs, you pay an annual renewal for the LLC to exist or biannual, or depending on where you live. The S Corp election, making the election is free, but what's costly is the additional maintenance. So if you need to add on more comprehensive bookkeeping, a payroll software, or the support of a company like Collective, it is more costly and more complicated to operate. And I'm going to take a quick break while we pull up a poll. Thank you for your participation. We do these polls so that we get feedback to improve these sessions. So Sarah, if you don't mind pulling up the poll, and we'll give it a quick second. And thank you for bearing with me. I am getting a little bit winded. Real quick, while we wrap up that poll, if you're somebody who's structured as a single member LLC, you're exploring an S Corp, or you need help setting up an LLC, you're welcome to scan this QR code. It's also in the background of my screen. You can scan it. It's going to take you to a link to book a call with one of the people on our team. They can talk about your specific situation, see if either tier that Collective offers is a good fit for you. The QR code will remain up while we dive into Q&A, but it's a free call to see if Collective is ultimately the right fit for your business. And we're going to pivot. Marcia, great question. If you don't mind putting it in the Q&A, and quick reminder, if anybody put a question in the chat, please migrate it over to the Q&A box so we can get started with your questions. The first one is a layup. Thank you. Will the recording be shared? Yes, it will. And they're also published on YouTube. So if you go to our YouTube channel, you'll see today's webinar session plus the sessions from weeks past. All right, Galena, could you please explain benefits of having an LLC partnership versus single member LLC? So ownership really depends on how you want others to participate in your business. When you are a single member LLC, you're what's called a disregarded entity for tax purposes, which means the IRS views you and your business as one taxable unit. So that's why you put all your business activity on Schedule C. You don't file a separate business tax return. When you are a partnership, a true partnership, so you don't live in a community property state and your partner is not your spouse, and there's additional owners, your default tax status is filing a separate business tax return, and that would be a partnership tax return. Um, I'm going to just, be honest, partnerships have a large scope of specific rules that are a little bit more complex. But the biggest difference is once you have a multi-member entity, it triggers that additional filing requirement where you file a separate business tax return. You need more comprehensive bookkeeping. You have an additional tax deadline. Versus single member LLC, you're keeping your tax profile relatively simple. In terms of the benefits, it really just depends on, if you have a business partner and you want to go in on 50-50 ownership or a percentage of ownership. Collective scope is really isolated to single owned businesses. But, truthfully, it just depends on how do you want to structure your business and do you want other people involved in the, ownership allocations. Deanne's asking, if I file for a late S Corp designation for an LLC created in May of 2025, would I need to worry about not having run payroll for 2025? What's the best way to handle this on 2025 taxes? So this is a question about electing S Corp status for a period that's passed, which is technically doable. So I'll just level with folks here. Collective is unable to do 2025 S Corp elections. And the reason is there's a lot of catch-up work that needs to be done. So Deanne, if you were to make this S Corp effective for that period, May 2025 to 12/31, your initial S Corp tax return would be due March 15th of this year, and it would need to be filed or extended. So what would you need to do to generate that tax return? You would need, the comprehensive financial statement, so profit and loss and balance sheet. You would need to identify a preparer to help prepare and file that by March 15th. And then the payroll. So the payroll is a requirement of being an S Corp owner, specifically if you take money out of the business via distributions. The reason is if the IRS sees money taken out of an S Corp, so a distribution, without a salary, then it can look like tax avoidance, right? You're not paying into the Social Security and Medicare taxes when money comes out as a distribution. Under the S Corp election, only the portion that's run through the formal payroll, your reasonable salary, has that Social Security and Medicare tax accounted for. So really when people ask this question, I say, well, what's the risk? The risk of having an S Corp with distributions and without a salary is that the IRS could look at it and say, well, we've determined a salary for you, and now we're going to assess that payroll tax on your behalf plus penalties and interest. Now, if you wanted to tackle it for 2025, the payroll tax deadlines for all the quarterly and payroll or quarterly and annual payroll tax returns are due January 31st. Frankly, if it were me, I would look at my opportunity cost. Is there a savings potential for 2025? And is it worth the cost, the time, the effort to get compliant for a 2025 tax return? So Deanne, I would look at the risk, and is the risk worth what you might get for a 2025 S Corp election? Otherwise, 2026, you're well within a timely election for this current tax year. Louise, I created my LLC a long time ago. Can I elect S Corp years after creating the LLC? Yes, you can, but your effective date may just be more current. So similar to Deanne's question, you can go back in time. I believe the IRS allows you to go back 3 years, but what needs to happen for you to get compliant and file those tax returns that would be due? Louise, even if your LLC existed, you may be able to elect S Corp for 1/1/2026. Can I take a home office deduction with an S Corp like with an LLC? Do I have to pay the same salary to myself every month, or can I just do it quarterly or annually? I don't know how much I'll make for the year. So first question, yes, you can take a deduction for your home office under the S Corp. So nothing changes in terms of what's deductible. It's really more this reasonable salary requirement gives you the chance to control and potentially reduce how much you pay in self-employment tax. So normal deductions like home office, your subscriptions, marketing, all that remains the same, including home office deduction. In terms of the salary, so the way we see people choose a salary when their income fluctuates throughout the year is they'll do a best guess at annualizing their business activity and set a base salary target based on that estimate. Then in between, you can skip payroll if you need to. If something fluctuates, you can run an off cycle bonus if you want to get you more of where you want it to be. So there's a lot of flexibility in the in between. You're kind of just aiming for an annual target. Generally, we don't suggest doing lump sum payments like quarterly or annually, specifically annually. The IRS does want to collect your income as you earn it, right? When we're salaried elsewhere, that's kind of how it works. If you're, on a biweekly cadence, there's withholdings every paycheck. So the IRS wants you to mimic that. So the way we've seen people done is you set a target, and then in between, it's super simple to skip or run off cycle payments. 34 questions. Usually we try to get through as many as possible. I don't know if I have it in me today, but we'll do our best. So please hang on. If you got to drop and we're continuing, the recording will be posted. Donna is asking, I have a series LLC in Illinois, which I established over 20 years ago and intended to use it for real estate investing. I'd like to learn about how I go about using it for other states. Advise, please. So I'll level with you, Donna. Series LLC is beyond the scope of collective, and I actually don't know much about it. Come from public accounting and don't have a whole lot of experience with series LLCs. But for real estate investing, again, this is something that's out of scope for collective, but generally, you can keep an LLC and repurpose it for something else. Make sure it's in good standing with the state of Illinois. When you do real estate investing, and this is just super high level, if it's going to be within the state of Illinois, that would be fine. If you're going to other states, you may have to do what's called a foreign registration of that LLC that originated in Illinois and tell the other state where this property is that you're doing business with an LLC that was formed elsewhere. So I would look into a foreign registration. But real estate investing generally is out of scope with collective. It can get a little bit complicated. So I may recommend, meeting with a real estate CPA. But generally you can repurpose an LLC and then you may create a presence in another state by owning property. And maybe that can be resolved with a foreign registration. I see some great questions in the chat. If you don't mind copying and pasting to the Q&A, we're just looking at one little box right now instead of both. But thank you for the questions. And Sarah, the link to the YouTube channel, actually, if you don't mind posting that in the chat, it looks like folks are looking for that. If you're retired and getting Social Security and Medicare, do you still have to pay those taxes? That is a great question. And I think that I've done some research on this, and right now I don't know. I believe generally, I think a lot of times the exemptions for Social Security and Medicare are, it may be a short list. So if you're receiving benefits, it may so more have to do with the amount you're allowed to earn to still receive benefits. Anonymous attendee, I may have to do some more research and get back to you on that. Generally, if something is considered ordinary income, so it's just a regular self-employment income, I believe it's still subject to the Social Security and Medicare tax. And then it increases your contributions, I believe. Deborah is currently operating as a DBA. I'm teaching online classes. I really don't need liability. Is it okay to keep my business as a DBA versus an LLC? So Deborah's asking, so what this means is you're operating as a sole proprietor. So there's no legal entity formed, but with the state, you've just registered a business name that you're operating under. So this is what a DBA is referring to in Deborah's instance. She doesn't have a big need for liability protection just due to the nature of her business. So is it okay to keep my business as a DBA versus an LLC? Deborah, it would depend on your growth goals. So from a tax perspective right now, if you were to just form an LLC and stay an LLC, nothing would change for your tax bill. All your business activity for teaching online would still go on your personal return, and the self-employment tax would just apply the same way. You would gain a layer of liability protection. If you form the LLC and also still did nothing, the LLC would at least set the foundation for a future S Corp election. So if you're growing or you're getting tired of the self-employment tax bill, having an LLC is going to open the door for an earlier S Corp election, meaning if you formed an LLC now, and then let's say in March, you're like, okay, I'm going to double my rates and I'm going to really pick up this online class schedule, and your profit increases. Having that LLC now means you can say in March, oh, I want to have S Corp treatment for most of 2026. And then maybe you can, retroactively date that S Corp election effective January instead of, when you decide in March. So the LLC does need to be in place first if you want the S Corp election. If it's, like a side hustle and you don't want it to grow, there's nothing wrong with staying a single member LLC or a sole proprietor with a DBA. It can just limit the potential for electing S Corp status in that period. Anna, what is the difference if the LLC can be treated as an S Corp? So from a tax perspective, single member LLC, you're paying self-employment tax generally on all your profit versus adding an S Corp election. So a single member LLC by itself is an entity with the state, and the IRS doesn't recognize it separately for tax reporting if you're the only owner, which means your business is just lumped into your personal filing. When you add an S Corp election, this is from the IRS, so the federal government. When you add this S Corp election on top of an LLC, you're now both. You're an LLC with an S Corp election. And now you're taxed as an S Corp, which means you trigger this business tax return, you pay yourself a reasonable salary, and then that's what opens the door to reduce or potentially reduce that self-employment tax. So LLC is a legal foundation, it's a legal entity, and S Corp is a tax election. You can exist as the legal entity by itself, and your tax treatment would be, sole proprietor, disregarded entity, meaning it's all grouped into your personal filing. Or you can be an LLC with the S Corp election, which means now you trigger this, separate reporting and business tax return. If profit is used to determine tax liability, determined by subtracting cost of goods sold and expenses from gross revenue. Okay, so this is a question about how you arrive at profit. And so they're asking, is it determined by subtracting cost of goods sold and expenses from gross revenue, or is it revenue minus cost of goods sold only? Okay, so you're making me think about the flow of a profit and loss statement. So we start with gross revenue, right? This is just money in that you bill from your clients. Oh my gosh, it's been so long since I've done any detailed bookkeeping. It goes gross revenue, then it's generally cost of goods sold, and then you arrive at gross profit. So gross profit is gross revenue minus, cost of goods sold. Typically, we see cost of goods sold with a different non-service-based profile. So if you are in manufacturing or Etsy shop, construction, you've got supplies and materials because you're producing a product. Even if it's a digital product, you'll have cost of goods sold. After gross revenue, after gross profit, or after cost of goods sold, you arrive at gross profit. Then gross profit is kind of like the new starting line. And then you have your normal business expenses. And then after that, you have net business profit. Your tax liability is generally based on the net profit, so that bottom line. So if you're a Schedule C filer, that's going to be line 31 of your Schedule C. Now, there are some metrics, maybe sales tax. If you're someone with sales tax, you have cost of goods sold, maybe gross profit becomes a metric that is important for your business for some kind of tax reporting. But generally, from a self-employment tax and an income tax perspective, we're looking at that bottom line, the gross profit, the net profit at the bottom. Michelle, can you convert to an S Corp at any time? So a legal structure needs to be in place first. So assuming you have, let's say it's a single member LLC. The IRS has some deadlines. You need to make the S Corp election within 2.5 months of your desired effective date. So if you want a January 1 effective date, you need to make that election by March 15th to be considered timely. If you make the election after that timely deadline, the IRS has a late relief process. You just have to fill out the same form. It's a little bit more complicated. You need to give reasonable cause. And then still, maybe do some catch-up bookkeeping, catch-up payroll. You can go back up to 3 years. But again, like we mentioned at the beginning of the Q&A, you need to make sure you can compile everything you need to report the the S Corp on those tax returns for the period that you're trying to go back to. So if you want a 2026 S Corp election, doing it before March 15th means you lock in timely filing. So generally that means less catch-up work. We're not rebuilding your books for a longer period of time. We're not catching up payroll for a longer period of time. And the S Corp election is generally simpler. If you do it after, you have to follow the late relief process, and then, getting caught up with the financial statements and payroll may be more time consuming and maybe more costly. Tom's got a great follow-up question. Can I change to S Corp on prior years? So assuming you had a legal entity in place, I believe the IRS lets you go back 3 years, but you do need to have everything. The IRS wants to see you intended to operate as an S Corp for that period. And so things like the books and the reasonable salary need to be accounted for, right? It's kind of like that risk reward assessment to go back to those prior years. Ramesh, the recording will be sent to you after the session and will be posted on YouTube. Does W-2 income of a spouse also apply for single member LLC? So if your partner works on salary, it doesn't matter. The IRS assesses Social Security and Medicare tax per individual, right? So if you were to go to like the Social Security database, you could see your individual contributions throughout your lifetime of paying into those systems. So it's determined per individual. So when you're trying to determine whether or not, S Corp or single member LLC is better for you, you really just want to consider your wages. Your partners don't necessarily matter for the Social Security and Medicare tax piece. Their wage does contribute to your total household income and will help determine your income tax rate, but it doesn't impact the potential for savings with the S Corp and your self-employed business. Okay, Louise, you're talking about self-employed earnings, but if I elect S Corp and start to pay myself and deduct the federal taxes, I will not pay self-employed taxes because I will receive a W-2 and not a 1099 NEC. Can you explain the difference? Okay, so this is about what taxes you pay and the tax forms you receive when you're structured under either. When you are under an S Corp and you pay yourself a wage, and it's run through payroll, you pay into Social Security and Medicare. And when we're, a Schedule C filer, we call those taxes self-employment taxes. It includes Social Security and Medicare. When you make the S Corp election, that same bucket of tax, Social Security and Medicare, is now called payroll tax under this structure. And that payroll tax, still the same bucket of taxes, Social Security and Medicare, the employer portion of it becomes a deduction. So here's what happens with self-employment tax. You've got 15% made up of these two, Social Security and Medicare. When you're self-employed, you're wearing two hats. You're your own employee and your own employer. And so that 15% is the combined total of self-employment tax the IRS wants to collect. When you are an employer of somebody else, that obligation splits in half to where now the employee is responsible for half of it. It's like 7.65%. And the employer, your own S Corp, is responsible for the other half. So if you're on salary with another company and you were to look at your pay stub and you look at that Social Security and Medicare box, you're paying half of that 15%, 7.65. And your employer is paying the other half and they get to deduct that half. So under the S Corp, that employer portion of payroll tax becomes a business deduction. And then your wage, your W-2, will have your portion, your employee portion, 7.65%, that you'll pay on your wage. So now out of your S Corp, and I understand this might be getting a little convoluted, under your S Corp, you might receive now, instead of a 1099 NEC, you'll get a W-2 that's going to show your salary portion of your earnings from the S Corp. And then there's another tax form called a K-1, which shows the remaining profit, the leftover profit that was not on your salary. And then you include both those tax forms in your personal tax return. Versus being a Schedule C employee, all your income is just your gross income is received on a 1099 NEC. You report that as gross income, and then you write off all your deductions on the Schedule C. All that now happens on a business tax return, and then you get the summarized versions on your W-2 and your K-1. Louise, that was a lot of questions, and I hope I answered some of them, but I do apologize if that was a little bit long-winded. We are over, and there's 133 folks on, so we're gonna keep going. There's more questions. Thank you. I'm gonna go as long as I can. I apologize if the sniffling is bothering you, but we're gonna go because we love this engagement. So, uh, Belisi's asking, I registered my childcare business as a corp in October 2025. I then filed on the same month to elect the S Corp status, but haven't received approval yet. First, I'll say it's relatively normal. Sometimes the IRS can take a couple months to receive that confirmation. Once approved, will the S Corp election status apply to the 2025 season or the 2026? So, if you were to look at your S Corp election form, this is form 2553. I think it's box E. You will have put a desired effective date. For your situation, the earliest that effective date could be is the October 2025 date. So when your legal structure was formed, that's the earliest it could be. So take a look at that 2553, see what your effective date is. Generally, when people ask this question, they're not sure. You want to make sure that you filled out the S Corp election properly. So if there's something that the IRS could reject it, there is a chance that the acceptance comes back with a different effective date than what you put. And sometimes this may apply if it's got a short period. Assuming the S Corp election paperwork was filed properly, like all the signatures are filled out, it's reasonable to expect it would be accepted, and you would have an initial short period S Corp tax return. So October 2025 to 12/31/2025, that would be due March 15th. There are resources. If you want to send me an email, put your email, or maybe Sarah, we can take down your email address. We have a resource. It's a guide on how to check your status with the IRS. It involves calling, but you may be able to get an answer sooner so you can plan out what you need to file for this tax season. Kata's asking, single member LLC or incorporation? So this is a question about legal structures. So when you go to form a business at the state level, you'll see, an LLC, or you'll see what's called a legal corporation. Sometimes it's called a stock corporation. Both of these are legal structures. Both of them can have the S Corp election layered on top, but their foundation allows for a different type of growth. So single member LLCs will both give you a layer of liability protection. But single member LLCs generally are used for businesses that want to stay small, they're closely held, versus a corporation or a stock corporation. This foundation allows for bigger growth. So think of a company that wants to IPO, Google, Amazon. They want to issue unlimited and various classes of stock. You've got international investors. So there's all kinds of growth that the legal or the stock corporation foundation allows that a single member LLC does not. So it really depends on your growth goals. If you're like a fintech company and you're going to issue, stock to your employees, and you want to IPO, that legal foundation is more likely going to be the Inc., the corp. Stacy's asking, what is a balance sheet? So in accounting, there's like an accounting equation. Assets equal liabilities plus equity. And equity includes your profit. So there's this whole equation. It's literally a balance sheet where what happens on one transaction, there's an equal and opposite transaction to balance out these financial statements. So a balance sheet shows the health of your business at a particular date and time. So balance sheets dated 12/31/25 will show your cash balance at that date. Maybe it'll show the credit card debt. Maybe it'll show the balance of your car loan at that date. And then your total owner equity. So this is the accumulative income that your business has earned year over year, and it all balances out. So it really is an equation. It's one of the critical financial statements. Even big companies that are public need to issue profit and loss, cash flow, balance sheet. The S Corp tax return relies on profit and loss and balance sheet. So this is why it becomes more important if you make the S Corp election. But it's really tracking the health of your business. If you've heard of debt to equity ratios, or you want to know how liquid your business is, those metrics rely on a clean financial statement, and it'll be the balance sheet. Gilbert, hello. I am new to business and started at the end of 2025. I filed taxes for my single member LLC. Did I not need to do that since I would just need to add it to my Schedule C to my personal filing? So taxes aren't always as simple as one filing. Many states, like I'm in California, um, have a single member LLC state level filing. So in California, for me, it's called a California Form 568, and it's essentially a short. It's a smaller tax return that's just due for the state of California. So in some instances, you may have a state level obligation. You still, if you had profit and loss from 2025, you would still include that activity on a Schedule C for your 2025 tax return. So it just depends on what exactly happened in 2025, Gilbert, but what you might have filed could have been a state level, Secretary of State filing or the California LLC filing by itself. Otherwise, that business activity would just get looped into your Schedule C on your personal return. So it may be reported in both. One may be more of an informational filing versus one is truly reporting the business activity. Stacy's asking, can we add collective if we use a CPA? So a lot of our members have a personal CPA to help with like bigger picture tax planning. Maybe you've got some trust, some real estate. Your personal tax profile may be more complex. And a lot of our members pair a CPA or family CPA with the supportive collective. Collective would really just be isolated to what's going on in your business, specifically if you're an S Corp, and we would manage the stuff that a CPA may not. So monthly bookkeeping, the payroll component, we would file the business tax return if you're an S Corp owner, and then we would give you that W-2 and the K-1 that you can then hand over to your personal CPA if you want to keep using them for the personal filing. So we do have members who combine the back office supportive collective with, their big picture tax planning CPA. Tom, yes, there will be a replay sent to your email and posted on YouTube. 41 questions. I feel like there's just more and more being added. We're going to hang on because we've got 125 people still on. Thank you. Stacy, how does Collective actually do the S Corp election for us, and how much does it cost to set up? So the S Corp election, assuming you have an LLC in place, we would, first start with like a due diligence check. Is that LLC in good standing with your state? And then if not, help you get a plan in place to get it caught up. Once that LLC is established, we fill out the form 2553 on your behalf. You would do a review, like a doc or a wet signature is actually what's required for the S Corp election. And then we'll fax it to the IRS on your behalf. Everything with Collective is a bundle of services. So we don't have standalone like S Corp election. So if you join Collective as an S Corp member, we're $349 a month, month to month. Included in that is filing the initial paperwork to have the S Corp election. And then we pivot over to your onboarding where we set up your business bank account connected to our in-house accounting software. So we can do the monthly bookkeeping. We categorize and reconcile to your business bank accounts and credit cards. After that, we make sure your reasonable comp is set up. We partner with a payroll software called Gusto to fulfill the payroll needs. And then we're kind of just in maintenance mode until it's time to prepare and file your business tax return. So $349 month to month. It includes the S Corp election, Stacy, and then everything you need to maintain that S Corp status. Victoria, do I need to make a minimum per year to have an S Corp? This is a great question. Thank you for asking, Victoria. No, the IRS does not put an income limit on having an S Corp election. So some people I've seen in public accounting run at a loss. Some have millions of dollars running through their S Corp of profit. So it doesn't matter from an IRS perspective. However, if you are someone looking for a tax savings opportunity, your profit may determine what that savings potential is. Or it's a factor that may determine what your profit or what your savings potential is. Generally, what people are looking for are the savings potential more than the cost to do all the extra work? And that's kind of the threshold we're looking at to see, quote unquote, is it worth it? If you're profiting between $60,000 and $80,000 each year, it's a good time to have a conversation about your tax status. It doesn't mean it may make sense for your situation, but it's a good time to talk about it. Thurman's asking if we can add the link to Collective on the chat. And I believe Sarah's posted it, but she can post it one more time for you to book a call. We're going to keep going. Is there a way to, oh, no, I'm sorry, Jamie, what if you're an S Corp and your income dips under 100,000? Again, there's no rule to how much money you make, how much you're profiting to have an S Corp. If your business activity fluctuates, it just may mean that in that particular year, your savings potential may be less than it was in year one, or maybe year three. The next year, maybe it goes back up. So there's no rule about your S Corp existing with any amount of profit, even a loss. Um, it just means that maybe your savings advantage is different from a year with higher profit. Is there any way to compare the basic startup costs for single members LLC versus S Corp? We have some materials that we can find. This is a great flag for us. Thank you for calling that out. We can get some resources on that. Thank you for asking that question. Are distributions still considered an accessible income under S Corp, even though it is a separate amount from payroll income? This is a question on how easy it is to access the additional profit coming out of your S Corp. And this is a great question. So if you're a sole proprietor or single member LLC, you just have a pool of profit and then you take it out and use it as you need it for personal expenses. That's an owner distribution. So it doesn't funnel through a payroll process. You just take it and use it and spend it personally. When you're an S Corp, the way you receive your income is now in two buckets. So take the same amount of profit, but now a portion of it comes through the reasonable salary. Maybe that's on a direct deposit cadence that you set it and forget it, and it's running in the background. The rest is available as a distribution, and the cadence and the amounts are totally up to you as the business owner. So a lot of people will just time it, same with their payroll. So it feels like a normal paycheck and the cash flow feels consistent. Some people just, do the payroll and then take distributions as needed. So it's really up to you. The only thing we'll say is leave a buffer in that business bank account. Don't drain it because, your normal business expenses need to continue to be pulled out of that business bank account. But that distribution income is as accessible to you as, an online business transfer or a cash withdrawal from that business bank account. And then on the bookkeeping side, we would just mark that as an owner distribution. And that now, flows into your balance sheet and contributes to your overall financial statements. So TLDR, super accessible. It can be as easy as facilitating an online transfer or a cash withdrawal. And then the payroll component's kind of just more on direct deposit. Okay, 38 more questions. I don't know if I have it in me to get through all of these, if I'm telling the truth, but we will keep going, maybe to the top of the hour. And then we'll find a way to address these other questions because these are great questions and somebody else is going to ask them at some point. So we'll keep going. Thank you for the over 100 people still on. Marcia, how do wages work if my income varies each month and some months it may be zero? I've been keeping all my income as I need it for life expenses. So assuming you elect the S Corp status and you're on payroll, there's a lot of flexibility on how you get to your target number at the end. So if you're in a period, well, first I'll back up. A lot of the folks we have with variable income will start with a less frequent payroll cadence. So instead of biweekly, maybe it's a monthly payroll cadence. So it's less frequent. Then from there, you can skip a monthly payroll. Maybe in December you run two. So there's a lot of flexibility in how you arrive at your target at year end. So Marcia, for you, it could be as simple as skipping a payroll run. And then, maybe taking a distribution if you need to supplement, and then running an off-cycle catch-up payroll in a month after. Maybe you run two payroll cycles instead of one monthly later in the year. So it's very flexible. Thurman's asking, does having an EIN matter for LLCs or sole prop? Yes. So sole proprietor, when no legal structure is formed, you can apply for an EIN. And this is, doing this does not create the liability protection of an LLC, but it does help you, or it does help you, or it prevents you from having to give out your social security number, like on W-9s or W-4s. So you can apply for a sole proprietor EIN, and many people do. When you form an LLC and there's a new legal entity established, a new EIN will be created and associated with that LLC. So if you had a sole proprietor EIN and then formed an LLC, whether that LLC elects S Corp status or not, there will be a new EIN. And anytime there's a new EIN, it's a little bit of an administrative hassle. You need a new business bank account under that new tax ID. So it's an asset of that business and that legal structure. You may have to update your contracts, your invoices to clients, make sure they pay the new business bank account and pay the new tax ID. So the IRS gets tax forms issued to the right tax ID. But yes, having an EIN does matter. It's kind of foundational, especially once you have a legal entity established, like an LLC. Sole proprietors, it's totally up to you. The QR code is taking me to a page to sign up and not set up a free call. Let's see. The QR code should take you to like a questionnaire, and then the end result should be schedule a call. If it's not, anybody else is getting that issue, we'll make sure that we get the right link in the email after the webinar. But Sarah, I think you posted the link to schedule a couple times. It may be in the chat if the QR code's not working, and thank you for calling that out. Pamela, I deal in real estate. I have renovated several homes and rent out some and have sold others. I know the sale is capital gain. I'm selling most of my rentals and now renting only commercial properties. So should I have each commercial property in a separate LLC, and should I have an S Corp as an umbrella, and how does that work? Pamela, this is a great question. It is beyond the scope of collective. Real estate can get complicated very quickly in terms of who should own what and how many separate entities. From my experience in public accounting, I've seen one or a handful of entities owned by one LLC. I would suggest meeting with a real estate tax professional to talk about the best structure. I have seen, umbrella companies that hold the various LLCs that hold various properties. So you want to consider, the liability protection is always a good idea, but whether or not it's structured on an umbrella or the LLCs are single member and they're all reported on your personal return, that could be an option. But I would suggest talking to a real estate tax professional. Molly, I'm a property manager, personal assistant who just registered for a business license. If I'm going out for a full-time salary estate manager position, should I have them pay my business or myself? Molly, this is a great question, and it really just depends on whether or not you want to be self-employed. If you have the option to be an employee for this real estate manager position, you got to consider what's your total compensation package. And then if you were to pitch it to be contract, can you recoup enough of that so your total compensation package is about the same? So what I mean by that is not just salary, but what about health insurance that they're covering? What about 401k matching that they're covering? It is generally less expensive for you to be an employee of another company. So I think it would depend on whether or not, you like the ease of being an employee somewhere else, or you're okay with taking on a lot of the extra back office work for being self-employed. So it may be a personal decision. If you're trying to decide between the two, look at the total compensation package. And then if you need to source your own health insurance, 401k, if they have 401k matching, like that's a win by itself. It's less expensive for you, even if you owned your own S Corp. So consider total compensation packages, and then whether or not it's like in your personality to, have all this administrative work and, managing being self-employed is not easy. YouTube link, I believe, should be in the chat, Maria, but we can also make sure it's in the email at the end. Katrina's asking, should I change to S Corp from LLC if I do not take funds out of LLC but collect Social Security? I don't want to exceed my earnings limit. Okay, so Katrina, I'm not an expert on like the Social Security and earnings limit side, but your single member LLC, whether you take money out of it or not, and this applies under the S Corp, whether you take a distribution or a salary or not, if either of these entities earns profit, it's still going to be considered taxable income to you. And it could still contribute to whatever that limit is for Social Security. So it may not matter whether it comes from an LLC or an S Corp, still profit that ultimately flows to your personal tax return. Let's see. Kim Hicks, how can a partnership LLC producing 1065 with 3K1s go to an S Corp? My understanding is the election by 315 for 2026. How does the individual handle their personal taxes? So Kim, same S Corp election process. Unfortunately, collective can't help. We can only do support for businesses of one, but same S Corp election to form 2553 can be made on top of that multi-member LLC. All the partners would need to be listed as owners and sign off on it with their ownership percentage. And then it's a relatively similar process. Right now, you're filing the 1065 by March 15th. You would still file a business tax return. It would now be the 1120S due by March 16th. And it would still issue K1s. So you'd make the S Corp election. If you've got a CPA supporting you, they may recommend filing it as an S Corp return this year and attaching an S Corp election. That could be an option. Or you just file a 2553 for the 2026 year. And then, your operating may remain the same. Bookkeeping's in place. You may have to switch to a payroll structure. Owner salary under partnerships, it's a little bit different where there's no formal wage, maybe guaranteed payments on that end. So you may have to establish a payroll piece if you elect S Corp, but generally the deadline's the same. You still file a standalone business tax return. You still need bookkeeping. You can just make the S Corp election on Form 2553. And then for the individual side, they'll still expect a K1 to include in their personal filing and a W-2. Stacy's asking, wouldn't everyone want to do a small reasonable salary since that's all they pay the taxes on? So minor edit to this comment, Stacy, they only pay self-employment tax on that reasonable salary. So all of the income is subject to income tax always. And in theory, yes, the lower you pay yourself a reasonable salary, the more potential there is to save on self-employment tax. Again, what's the risk? If the IRS sees a salary too low, it could be flagged, and then the IRS could determine a salary for you, and then assess the unpaid Social Security and Medicare tax on that salary, plus penalties and interest. So that's the risk. Choosing a salary is ultimately up to the taxpayer. So you can ultimately decide, and maybe it's, what is my risk aversion? Am I comfortable with a reasonable salary that's lower? Do I want to meet somewhere in the middle? Or do I want a higher salary so I can do a higher, retirement employer contribution, right? So it depends on your risk aversion, but in theory, yes, the lower you pay yourself, the more you could save. It's just, what's the risk? And are you willing to take the risk with the IRS maybe potentially reassessing that salary for you? 92 folks. I make 33 questions. I mean, come on. Thank you guys. Let's do 7 more minutes and then we'll call it. Anna's asking, expenses are deducted only on 1099s, not on W-2, correct? So if you are an employee of another company, not your own S Corp, and you get a W-2 from another company, generally you can't deduct expenses, right? It's the IRS doesn't allow you to deduct expenses when you're an employee of another company. If you're on 1099, meaning you're a Schedule C or a single member LLC, you're getting 1099 and you report on the Schedule C, you have the opportunity to write off business deductions. If you're getting paid to another entity via S Corp, you still write off deductions, even though you're an employee of that business. So if you're an employee of your own S Corp, you can write off deductions, right? Because you have that business tax return to funnel your write-offs. If you're an employee of someone else, the IRS does not allow you to be on W-2. And you know what? I'm sorry, I do have to call it because I have another meeting. Thank you so much for all these questions. There's 33 left. We do have a log of the unanswered questions. So however we can, we will find a way to give you resources to address these. We do these sessions often, so feel free to come again. Find me on LinkedIn, follow Collective, and hopefully we can get you some answers. Thank you again for the participation, and we'll see you next time. Bye.